Hey guys, Mark here. And I just want to come to you and bring you some updates on what's going on in the market because, man, we got FUD in the news. Fear, uncertainty, and doubt is spreading through the markets. And what is going on, right? So, um, this year has been off to an interesting start. It rocketed out of the gate. We saw massive growth right after the first of the year up until first couple weeks of January, and it was amazing. Almost a 50% run up, followed by a 50% drop off. So a massive correction. Since then, for the last couple of weeks, the market is kind of in this consolidation move, what we call trading sideways. All right, so it's not really going up. It's not really going down. It's just trading sideways. So it's kind of going up and down, but just kind of staying in that range. So, we're in this correction. The market, the bulls and the bears are fighting over this. Nobody, can take control of the market. And in the midst of this, just as we're kind of waiting for things to settle down, we get massive FUD coming out about Tether. So I'm sure you guys have probably seen the headlines, maybe asking yourself, what the heck is Tether? What's going on? How does it impact the market? So that's what I want to talk to you about today. So, this massive news comes out with Tether. And first, before we get into what it is, I want to say I think it's a good time for this news to come out. Tether is a massive concern for a lot of people, including myself. It's something that a lot of people think could be affecting the market and could potentially have a very bad effect on the market. And as you can see, this news coming out, this FUD that's come out has driven the market down. I mean, yesterday, most positions were down as much as 20% on the day. So massive correction because of that. Today, we're starting to bounce back a little bit because of that. But I'm saying that it's a good time right now because we're in this consolidation period where, things are just kind of moving sideways. And so I'd much rather have this news come out now when we're in this consolidation period than wait until we're right in the middle of a bull run and we're just running hard, everything's taken off, and then all of a sudden you get this news to come out. So better to get it out of the way now. But back to what it is. So Tether is also known as USDT. So if you use Poloniex or Bitfinex or Bittrex or any of these exchanges, you'll see that there's a coin called USDT. All right. And so what that is that's a US dollar tether. And what it is basically it's a coin that's pegged or tethered to the dollar. So it's always worth $1. And the way that it's used is so if I'm in a position, so there's, Bitcoin, Ripple, Monero, Ether, they all have a trading pair with USDT. And so what happens is if I want to move to fiat, if I want to move to dollars, cash, get out of crypto, I can exchange one of those coins into US dollar tethers, into the tethers. And then basically it's like going to cash, but it's not. It's pegged to the dollar, but it's not $1. All right, so that's what it is. Now, the way it's supposed to work is that they keep this peg. It's always worth $1. And the way they do that is because they're supposed to have reserves. So for every tether, every dollar of tether that's out there, there's supposed to be $1 of reserves in the bank. Very similar to how the federal government works and so forth, where they were supposed to back the dollars with gold. And then, they started printing more money, and then countries started thinking they didn't have enough gold in reserves, and eventually, save you the history lesson, but eventually they got off the gold standard. And so that's kind of where we're at here, where the Tether, they're supposed to have dollar reserves, but today there's $2.3 billion in Tether. And so there's been several articles, a lot of independent research reports that have been coming out that are questioning if there is, in fact, $2.3 billion to back up these tethers. Now, it gets a little bit deeper because as we come to find out, Bitfinex, which is the largest exchange, is somehow associated with Tether, if not owns Tether, which they've denied, but the reports come out and show that they have. And Bitfinex is tied to lots of shady things. And so it wouldn't surprise me to find out that they are behind this Tether. Like I said, the reports come out and show that they are. And so these reports are saying that, there's this going on. But what they're saying is that Tether has been pumping up the price of Bitcoin. So they've been able to find that every time the tethers are printed and pumped into the market, it's right at a time when Bitcoin seems to be falling and it props it back up. So although it's only $2.3 billion of tether into a few $100 market cap of Bitcoin, the way that it's used is it drives that supply and demand, drives that price up, the buyers up. And so That's what's being alleged. That's what's being accused. The facts are that Tether was starting to work with some auditors to actually audit their books and to show that they did have these. But what happened, what really kicked off this firestorm, is that they fired their auditors. They dissolved the relationship. So right in the middle, as they're working through this, which I would imagine is a massive task, they dissolve the relationship. So that, again, looks pretty shady, as you could imagine. And then what happened is the U.S. federal regulators have now issued 2 subpoenas to get the records from Tether. So that's the CFTC and the SEC have both issued subpoenas. Now, I don't know how well that's going to work. Tether is a company that's registered in the BVA, which is British Virgin Islands. The reason why companies incorporate there is because they have, really, really solid privacy laws and so forth. And so I highly doubt the BVA will force Tether to release documents to the U.S. Department. What we saw, I think 2 days ago, is that U.S. regulators requested information from Korean exchanges. So they requested it. It's a lot different than subpoenaing it. So we'll see what happens with that. But the subpoena actually went out January 6th. So it's actually a little bit old news, but it just got kind of pulled out and started this whole firestorm. The thing is I find a little bit of irony with it, is that, U.S. dollars are printed with no backing. Like I said, they got off the gold standard in the 70s. I'll give you a little history lesson. I wasn't going to do this, but so gold, the dollars were backed by gold. And going into the 30s and the 40s, the U.S. had stockpiled all this gold and they backed the currency with gold, but the dollar was slipping and they were inflating it. They were printing more dollars than what they had gold. And they were trying to protect the peg. So it was about $30 an ounce. And what happened is all the nations around the world that were holding gold, they said, you know what? Fine, then we'll take the gold, because they believed the gold to be worth more. And so what happened is more and more countries kept coming for their gold, and they were taking all the gold from the United States. And finally, the United States couldn't protect it any longer. They said, enough, that's it. We're not redeeming dollars for gold anymore. And then that's when they started deviating from the gold-backed currency, although they did keep it, but they were going multiple. So now instead of $1 for an ounce, now it's $2 per ounce and $3 and so forth. And they kept going on until the 70s when they just said, you know what, enough, we're done, no more gold-backed standard. So that's kind of how that started. And the irony is that so now the feds have continued to print dollars to massive inflation, and Bitcoin was created as in correspondence or like retaliation for that. So they said, hey, you know what? It used to be backed by gold, but now it's just this fiat you can print away. So we're going to come up with the currency. Bitcoin will be like gold, where it's backed. It has a true cost. We have to mine it. There's a limited amount, a finite amount, et cetera. And so the irony is that these tethers are like the dollars, where they're printed with no reserve, and they're being used now to pump up the price of Bitcoin. But anyway, enough with that lesson. But the problem is that if in fact this is true, that tethers are being created to pump up the price of Bitcoin, then potentially Bitcoin price could be inflated way over what it should actually be at, what a fairly traded market would actually price Bitcoin at. And so that's the problem. And we don't really know how far that can unwind. So if in fact, these subpoenas go through and we find out that there are no tethers, there are no reserves, it would be crushing, as you could imagine. Potentially Tether could go down, potentially Bitfinex go down, which would be very, very damaging for the market. Now, nobody knows, right? We don't know, but as we've seen time and time again, these markets are driven by FUD, fear, uncertainty, and doubt. And so because that news came out yesterday, because it could be really bad, but nobody knows, it could also be nothing. But FUD drives the sentiment. Sentiment was down. Everybody was scared. Everyone was thinking, oh, shoot, man, Bitcoin could drop down to $4,000, which, by the way, if Bitcoin were to drop all the way to $4,000, it would still technically be in a bull run, because that's how far and fast it's gone up. So even if it did go down to 4,000, it wouldn't be alarm or cause for panic at that point, which I know sounds really bad, but we have to kind of step back. So what are we going to do about it? What do we do, right? So that's what we care about. What are we going to do? So we're going to do nothing. I know that sounds bad. We're going to do nothing. So you just got to know that there's always going to be bad news. We're always gonna have bad news. There's always gonna be scandals coming out. That's just part of any market. But we're focused on the long run, right? We're focused on the long term. And so because we're focused out 6 months, 12 months, 24 months in the future, whatever happens over these next couple of weeks or next couple of months doesn't really matter. To me, this doesn't change the fact that this technology is the biggest technological revolution that we've seen. It doesn't change the fact that all this money is about to flow into the market. It doesn't change my forecast and outlook for this year. So whatever happens over the next couple of weeks, I don't really care. So I still believe this is going to be a multi-trillion-dollar asset class. So what I always like to do in times like this, I've done it with you guys over and over and over again, is I like to look back. And let's just put some perspective into this to see how bad things are, okay? So I'm going to share my screen here, and I'm going to show you this. So this right here is where we're at right now. So you can see this peak right here was January 7th, and we were at $835 billion. This is the total market cap. So this is Bitcoin, Ethereum, Litecoin, Monero, everything added up, the entire market cap. January 7th was $835 billion, all right? That was a 3,000, almost a 4,000% return from the previous year. So almost 4,000% return, okay? Now, on January 17th, just 10 days later, it had dropped all the way to 425 billion, which is a 49% drop. Massive. Is it massive or is it regular? Let's take a look. So I would say it's a pretty good size. I wouldn't call it massive, but it's definitely more than average. It's a little bit more than average. I think about 30% is about average. So it's a little bit big. So let's take a look at this. So this is from December 1st to January 31st. Okay, so we have a peak on January 7th. We dropped 50% on January 17th. Now, if we take a look at this chart, this is the exact same period but the year before. So this is December 1st of 2016 to March 2nd of 2017, all right? So this is the exact same period. And as you can see, it ran up in December up to January 5th. The other one was January 7th, so 2 days difference. And it had gone up 50% over this short period of time here. And then it dropped from January 5th to January 12th. It dropped down to 14 billion, 33%. So almost the exact same days. And it dropped almost the exact same way, a massive drop. And so I was in the market back then, and that was huge. It was a huge drop, 33%, right? And as you can see, though, is that, the market slowly came back. And of course, it wasn't smooth, up and down, up and down. I mean, we had lots of drops happening here. And it took until 227 until the market had caught back up to where it was on this previous drop on 1.5. So put that into perspective of where we're at today, right? So we saw this massive run up from December to January 5th, January 7th in this case, and then it dropped all the way down, which is what we saw right now. We traded sideways, and based off of history, it wouldn't be surprising to see the market go into February or March before it gets back to the high, which was at 835 billion, all right? So this is all just normal. But here's what I want to show you. Here's where it gets interesting. So as bad as this was last year, let's zoom way out. Let's look at it from this period all the way forward. And here's where you're going to love this. So that just crash I showed you, the great crash of January 2017 is right here. Do you even see that? It's a blip. You don't even see it. As bad as that crash was, I lived through that. As bad as everyone thought the market was over, as bad as I showed you when it was zoomed in, it's just a blip. You don't even see it. And so the reason why that's important is that in a year from now, when we make this same chart, this choppiness you see over here on the right that's so scary for everyone right now is going to look like a blip again. All right. So we just have to put that into perspective. And so that's my point. That's what I wanted to share with you guys. So, we're not going to do anything. We're going to look for some perspective. We're going to hang on. We're going to focus on the long term. And, what we're going to do is just realize that these dips are not that significant. So turn off the news. You don't need to be refreshing your Blockfolio app or whatever app that you use. You don't need to refresh CoinMarketCap 10 times a day. It doesn't matter. You're not going to sell. Even if it hit $1 trillion today, you're not going to sell, right? So we're not going to sell for a year, 2 years, 3 years, whatever that is. So turn it off. come back in a month, right? Turn it off, go be with your family, go outside, get some fresh air. Don't worry about it. These dips are not going to be that significant. But I also like to say at times like this is, maybe it's time, if you're stressing out about it, is to look at your position sizing. Maybe you have too much involved. Maybe you have too much invested. So, if you're stressing out, if it's causing you to lose some sleep at night or whatever, then take the next little, rise to get out of some of the positions. The beauty is that we have asymmetric returns, so we can invest just a little bit and get massive returns back. So really just have proper position sizes so you're not worried about it. The market's going to come back. As I've shown you, it's kind of normal. We expect this. Now, I don't have a crystal ball. I can't tell you how long it's going to last. I can tell you that based off of history, I wouldn't be surprised to see it last another month, maybe a little bit longer. But it doesn't change the forecast of what I'm predicting for this year. I still believe we're going to see the biggest bull run that the world has ever seen in any market. I still believe that the market will be worth several $1 trillion by the end of the year. So we're just going to keep buying quality projects. We're going to keep getting only the best companies. We're going to continue just to hold them. And we're not going to stress out about it. We're getting into this early. So that's the risk that we play. So, if this is uncomfortable for you, you can go to the stock market. All the money's already been made there, but it's not near as volatile. You could come back to cryptos in 2 years when all this is figured out and it's not going to be so volatile. It's not swinging up and down, but you're going to lose out on the return. So because we're in early, because we have to suffer through this volatility, we get rewarded for that better. So just remember, we're in early. You got the perspective. That's all I wanted to talk about. Don't worry about tethers for right now. Do nothing. Just go enjoy yourself. And like always, I like to say, to your success, I'm out.